Hey everybody, this is Jim at SP500chart.com. It's a little after 2 o'clock on Sunday afternoon. Excuse me. Is that correct? Yes, that is correct. The time change. It is a little bit after 2 o'clock, Sunday afternoon, November 3rd, 2013. Now, that's Eastern now Standard Time. Make sure you set your clocks back. Excuse me. Yes, fall back. Boy, I'm confused about this. Maybe it's that extra sleep I got last night. But anyway, we're going to take a look at what happened last week in the S&P and also what happened on Friday after I tell you that the website and the video are for educational purposes only and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we're starting out here looking at a 10-minute chart that I need to scoot over to the left just a bit. A little bit more. And then give it a little bit of room at the top. And now we've got it. We are looking at the last, about 2.5 weeks. And let's do the weekly thing first. Here is the week highlighted in yellow. Coming into the week on last Friday, the 25th, we had identified the potential of a small inverted head and shoulders pattern here that's kind of highlighted in this light green. And lo and behold, on Monday, we got a non-technically significant breakout, a pullback, and then a little bit more upwards action. Once we saw that, I think the word, even though it wasn't a technically significant amount, this pattern had such a small target. It pointed to 1775, which, by the way, is by far an all-time S&P high. So it pointed to 1775, and I believe we had it targeted actually. I think the quote was 1775 to 1776. To make a long story short, that target was met early on Wednesday. So we made that target. These things have so far almost been foolproof. But after making that target, we came back down, took out this rising trend line. We also took out this speculative rising trend line. And if I'll remind you why that was speculative. That was a speculative line because it was only defined with one starting point and then the idea that we would possibly have a support line that would run parallel to our resistance line. And the interesting thing is that we never did really get a second bounce on this line, but when it broke in such a way that made it look like, yeah, this was a technically important line. We just never bounced on it. We stayed above it, and then when we finally got to it again and it broke, we saw, I mean, not a huge amount of selling by any imagination, because here we are at 1762 at Friday's close, less than 13 points off the all-time high that was set early on Wednesday. But still, the fact that it broke the way it did kind of suddenly is reminiscent of what happened back here on the 23rd. So I think this line is probably now flipped to resistance. And that's fine, because it's going up at too steep a pitch for it to continue anyway. So here's our week highlighted in yellow. We broke this line, back tested it soon after breaking, and then we've kind of been selling down with a little sideways with a slight downward bias. Now I need to tell you that there is a possibility that this could be a small head and shoulders top. But there is also a possibility that this could be setting up a bull flag. And we toyed on Friday with taking out what might be the neckline of this pattern. This is another possibility. So there are a couple, because these bottoms don't line up perfectly, where the neckline in this pattern might lie is a little bit up to interpretation. So here's what's interesting. Friday we were slightly up, and that's fine. Really, the things that I count as successes for the week were meeting that 1775 target. I think we were probably smart in putting this trend line right here, even though it seemed a little premature, and even though, I'll be frank, I thought we might get a good bounce on that. But we didn't. Instead, we took it out. Now, here's where it gets really interesting. On Thursday, the 31st, I had identified what appeared to be a resistance line. That is this line that I am highlighting right here. And we got over that resistance line and then came back down through it at the end of the day on Thursday. Then Friday, got over it again, and then came back down through it again. So what is that? If you're a chart reader and you see that kind of thing happening, what you can probably count on is the fact that even though there may be something going on technically with this particular line, maybe one of the many sectors, or maybe even a single stock, if it's a large enough part of the S&P, maybe we're getting some action that's creating these little patterns here. But for the most part, that means this line cannot really be counted on anymore. Either that or it never should have been counted on to start with. So let me show you what we end up with if we now make an adjustment and start with the all-time high on early on the 30th and run that line across the high of the 31st. I think you know where this is going. There you go. So what I think would be wise going forward is we mark this line right here as a more reliable resistance line, because each time we've come up to it, the S&P has given up about 1%. So that means there's some technical forces at work causing a little selling pressure every time we get there. Now I'm going to take this line and I'm going to move it slightly to cover the last two lows right here. And I'm going to make this also this light blue color. And this is what I want us to take away from the chart. If we are dealing with a head and shoulders top, then the market is running up and down all over what should be the neckline to this pattern. So that kind of calls this into question as well. We've got 1, 2 solid defining points for our top line, and we've got 1, 2 pretty good points for our bottom line. Coming into the week of the 4th, what I would look for if this top line right here gets taken out, then I would look for, and that could happen at any point during the day. As a matter of fact, it could happen on Tuesday, it could happen on Wednesday. It's just that if this line gets taken out, then this pattern will have the hallmarks of a descending wedge bull flag. Now, on the other hand, if we never get over this line and we start to take out some of our support lines underneath us, then we would know at that point that the head and shoulders top was the more correct take on what's going on. Now, folks, I know this seems kind of confusing, and lately it has been kind of confusing. And I think the reason why is pretty simple. The reason that it's hard to lock in on a good, even an intermediate term read, is because we do not have any intermediate term patterns. Currently, we don't have any long-term patterns. All we're getting lately have been these little tiny up and downs, all these little small reversals here and there. As an example, here's a super tiny one right here. Nice little inverted head and shoulders. And that's what it did. It sent the S&P higher. Right here. Actually, this is a little head and shoulders too. It's not quite as nicely formed. Sent the S&P higher. But this line looks to be, to my eye, to be resistance. Get over this line, and I believe we will head up and we will start to attack some of these other resistance lines that maybe could get back tested. And you'll notice that because of all of these lines are moving upwards, there's plenty of room for the market to make a move into the 1800s. It's just not going to happen in 3 days. We could stay underneath. If we break out of this little descending pattern right here, and if this does turn out to be a bull flag, this market can get to 1840 in about 2.5 to 3 weeks and still not have gotten over any of these support lines that have broken. And we've got room to do it underneath these long-term resistance lines. So, by and large, I feel like the week I was disappointed that we didn't get a bounce on this line here. I was kind of amused, if that's the right word, that when this line broke, it acted as if it had been a tested support line for a while, when in fact it had never been tested. So I was a little amused of what took place on Wednesday. But as far as predictability of what may happen going forward, I would look at this this resistance line as a signal that the S&P wants to head up and make even more new highs. And I would use, even though this is a little bit of a willy-nilly line right now, maybe we go back down to this light blue line right here, and say if we get underneath 1750, then probably we would be wise to look for something in the 1720s or even in the 17 teens. And if the wheels were to come off the market, maybe even in the 1700 single digits. But that would only happen if we encountered some really serious selling early in the week. So, basically, if this line goes, I would look for a test of this teal line right here. If this line goes, then I would look for, plain and simple, I would look for the S&P to set yet another new high. And again, this market's got room to run if it wants to. And it has not really shown any real strong sign, that was almost an oxymoron, a strong sign of weakness. Let me change that. It has not shown any real significant signs of weakness that I can see. We did break through some of these rising support lines, but remember, all of these rising support lines were really heading up at a serious rate of increase. I mean, we're talking about a market that if we stayed over this line right here, this blue line that broke on Wednesday, we're talking about a line that is moving up 100 points in the S&P every 12 sessions. And you know that's not sustainable. So guys, coming into the week, starting trading on November 4th, let's see if we're dealing with a bull flag. And if we are, then the S&P will take out this top line right here. and we will likely head up and set a new high rather quickly. If, on the other hand, we are dealing with some type of little top pattern that simply hasn't developed yet, maybe this is a left shoulder, maybe this is a head, maybe we get another little bump, then I would look for this line at about 1750 to be a significant area where I think we would need to get a solid bounce. So guys, there's your video and your weekly review. As far as, let me just look at Friday one more time. Here's Friday. You can see it really was something of if you look at this, it created kind of if you're a candlestick reader, sort of a hammer, but it closed near the day's highs. So that's a fairly bullish looking candle, but I would remind you that we ended the day as, quote, luck would have it, right near a technically important line, right at resistance. So what's going to happen on Monday? Watch the futures. This is the kind of situation in the past where we could gap up over this line, or it's also the kind of situation where we could simply open flat and we trade back down again for another tag on this bottom line, at which point we still would not have a really bearish outlook. I wouldn't be bearish until 1750 gets taken out. So guys, there's your video for the week ending November 1st, 2013. I appreciate you taking time out of your day to watch it. Those of you who are subscribers, I especially appreciate your subscription to sp500chart.com. Take care.